right now, the president has just started speaking in Phoenix, Arizona about his housing plans. Let's listen to what he says.
Day over 51. So over the last few weeks, I've been visiting towns all across the country, talking about what we need to do to secure a better bargain for the middle class. A national strategy to make sure that everybody who works hard has a chance to succeed in the 21st century economy. And I think people in Arizona especially understand the challenges that are out there because, for the past 4.5 years, together, we fought our way back from a devastating recession that cost millions of jobs for Americans. A lot of folks lost their homes. A lot of folks lost their savings. And what the recession showed was the long erosion of middle-class security that had been taking place for decades. But we fought back. We took on a broken healthcare system. We took on a housing market that was in free fall. We invested in new technologies to reverse our addiction to foreign oil. We changed a tax code that had become tilted a little bit too much in favor of the wealthiest Americans at the expense of working families.
That's President Obama talking right now live in Phoenix, Arizona, laying out his housing policy vision. It involves two competing goals. What are the goals and can it work? Nick Timiraos of the Wall Street Journal's real estate desk joins us now on the set. Thanks for being here. Housing, of course, long associated with the American dream. A lot of presidents have come out and with ideas of how to make housing affordable, how to get people on that way. What is he trying to do now?
Well, today he has not talked about housing, first of all, in a very long time. Yeah. Really, you'd have to go back more than a year ago. So it's been a tough issue to talk about, politically unpopular issue. Today he's talking about Fannie Mae and Freddie Mac, among other things. And
they're the two big government-sponsored enterprises that buy mortgages and help fuel the mortgage market, right?
Right. And so the government had to bail Fannie and Freddie out 5 years ago, and we still haven't decided what we're going to do with these companies. They're just kind of in purgatory. They're wards of the state. And so he's coming out and saying, here's what we should do going forward. This is a very heated topic in Congress. We've had a fiery debate going back at least a decade, and it's a really important sector of the economy. This is a multi-trillion-dollar sector of the economy. So what he's proposing today to do is essentially to replace Fannie and Freddie with some new system where the government would provide a limited federal backstop of mortgages so that investors will continue to fund the 30-year fixed-rate loans that Americans have come to know and love, and that might be harder to have widely available without a federal guarantee. He's also going to come in and say we need to have a lot more private capital ahead of any guarantee. So if we're going to have a guarantee, unlike the past where it was kind of an implied fuzzy guarantee, it should be explicit. Banks should have to pay for it, or these new mortgage issuers would have to pay for it.
So they might have to pay for insurance themselves.
The same way that banks have to pay for FDIC insurance, which covers bank deposits, minimizes bank runs. We kind of had a mortgage run in 2007, 2008, when investors fled from the mortgage-backed securities market. They would only buy securities with a federal guarantee. So this is some way to kind of try to bring some order to a market that lost its way.
And the other thing, he wants more people to own their homes, right? That's part of the idea here, or at least make it within reach.
Right, and I think if you read the president's speech today, there's a lot of interesting nuance in there. In the past it was always everybody should own a home. Yeah. And now
I think we've all realized that it's not really going to work.
It should be a goal perhaps, but we recognize that not everybody. Some people are going to have to rent, and so there's emphasis in this speech on renting. There's emphasis in this speech on not having a kind of, he says, my grandfather's day, a house was somewhere you lived, it wasn't something you flipped. And so this idea that we should get away from federal policy steering people to take risks, excessive risks in the housing market.
So one of the things here is that the fixed rate mortgage is something that people really like, and in my home country we don't have a federal or anything like that backstop, and the loans float. Right. So as soon as the Bank of England puts interest rates up, then your mortgage rate goes up, typically. Right. And that doesn't happen here. Is that something that the U.S. Economy might need to get used to?
Well, if we weren't to have federal guarantees, I mean, we really should have that debate about what kind of mortgage market do we want? Do we want to have more ARMs, adjustable rate, floating rate mortgages, and who's going to make those loans and hold those loans? In a lot of European countries, there's a consolidated banking sector, and so a lot of loans are held by a smaller number of really too big to fail banks. And we saw that in some of the Western European countries, banks had to step in and provide federal guarantees to their largest banks because that's where all the mortgages were. We've done things differently here. We gave federal backstops instead to Fannie Mae and Freddie Mac.
And then we had to back up not the banks, but the Fannie Mae and Freddie. So
exactly.
It resulted in a bailout. Anyway, interesting stuff. I'm sure it'll be a great read tomorrow. Thank you very much, Nick
Thanks, Simon.
Timiraos.